Hey moneymakers! Welcome back to Money Made Easy, your trusted guide to navigating the often complex world of finance. Today we're talking about someone who needs no introduction. The Oracle of Omaha, Warren Buffett. He was once mocked and ridiculed, especially when he amassed over $300 billion in cash. Critics said he'd lost his magic touch, that he was too old, perhaps even a bit senile, looking at his recent investment decisions. But once again, as U.S. stock markets plunged 20% into a bear market, remaining far from their all-time highs, Warren Buffett has been proven right. His investment fund, Berkshire Hathaway, hit historic highs during this very period and now sits on a mountain of cash, ready to buy at deep discounts. Welcome back among the super rich, Mr. Buffett. He is among the select few whose personal wealth has actually grown after President Trump's tariffs triggered a 20% market sell-off and crash. Today, Buffett is 94 years old, the fourth richest person in the world, and the only magnate among the top 10 whose net worth has increased this year, and all those who criticized him, they're silent once more. In today's video, I want to share a selection of the top 5 pieces of advice from this super investor that are incredibly useful right now. In this moment of market downturn and great uncertainty, because Buffett says it so clearly, things that Dante make sense can go on for a long time, but sooner or later they end. Just like the dot-com bubble of 2000, when companies with no revenue were valued at billions, or like bull cycles that seem to last forever, until all of a sudden, they don't. In its 60-year history, Berkshire Hathaway has navigated 12 negative years for the S&P 500. Yet, in 10 of those 12, it beat the market. And in 2022, when he was 91, Buffett invested $40 billion while the market was falling and everyone else was running for the exits. Then, during the incredible market rallies of 2023 to 2024, instead of investing aggressively like so many others, Buffett and his team spent the year quietly shedding stocks, a radical change from their previous stance. In fact, in 2024, Berkshire sold off $143 billion worth of stocks, more than triple the $41 billion sold in 2023 alone. Why? Because he knows these 5 rules. Let's dive in. Please remember that the information provided in this video is for educational and informational purposes only and should not be considered financial advice. Investing involves risk, and you could lose money. Warren Buffett's past performance is not an indicator of future results. Always do your own thorough research, understand your personal risk tolerance, and consult with a qualified financial advisor before making any investment decisions. Rule 1. Don't sell in a panic. This first rule is simple, yet incredibly difficult for many, especially beginner investors, to follow. Don't sell in a panic. Seems so obvious, but how many times have you seen it happen or experienced it yourself? The market drops 20% and investors flee as if a fire has broken out, Warren says. If you sell a house just because someone offers you less than you paid for it, then you shouldn't own houses. The same goes for stocks. It's like having a pushy neighbor who offers to buy your house at a different price every day. One day he offers 300,000 euros, next day 250,000 euros, then 200,000 euros because he's in a bad mood. Would you sell that house?
Oh!
Of course not. So why do it with stocks? If you own excellent companies in your portfolio because you've carefully selected them through fundamental analysis, it makes no sense to sell just because the market is volatile or having a hiccup. The longer you hold quality stocks, the less risky they actually become. Rule 2. Crashes are golden opportunities. The second rule is the opposite of the first. Crashes are once-in-a-lifetime opportunities. Real crises, the ones that push the market down by 25, 30, 40, or even 50%, don't happen every year. Consider that the last major crises and crashes were in 2001, 2008, and 2020. Buffett explains that the most painful mistakes of his career weren't the wrong investments he made, but the right investments he didn't make, because he procrastinated or overthought it. He uses a metaphor. He was sucking his thumb. Opportunities, Warren says, must be seized because they don't always come back. That's why you need to be prepared. When everyone else is panicking, that's often when true value emerges. Rule 3. Quality over cheapness. This third rule revolutionized value investing. It's better to buy a wonderful company at a fair price than a fair company at a wonderful price. Never buy just because a stock's price has fallen a lot. Buffett started his career by looking for so-called cigar butts, which are terrible companies sold so cheaply that there was still one last puff of profit to be made. We started this way, following the teachings of his mentor Benjamin Graham. But over time, he realized it's a strategy that doesn't build lasting wealth. What he means is that time is a friend to good businesses, but an enemy to bad ones. If you buy a mediocre company just because it's very cheap, you'll end up losing time and opportunity. It's better to focus on businesses with competitive advantages, solid balance sheets, and growth potential, even if they aren't at fire sale prices. During a crisis, junk stocks often become even junkier. There's always a reason why they are so cheap. Rule 4. Invest only in what you understand. Here's the fourth rule, and it's also very simple, but how many truly follow it? Don't buy what you don't understand. During a crisis, everyone will talk about opportunities. Collapsing banks, tech companies losing 70%. But if you can't understand the business, if you can't read their financial statements, it's better to leave them alone. Buffett famously says he'd rather invest in chewing gum than revolutionary technologies he can't evaluate. Why? Because he knows with reasonable certainty that in 10 years, people will still be chewing gum. But he doesn't know who the winner will be in semiconductors, cloud computing, artificial intelligence, or biotechnology. The truth is, you don't have to understand everything. You just need to know, well, where your competence lies and stay within that circle. Rule 5. Always look long-term. And now for the last rule, perhaps the most important. If you make it to the end of the video, there's a bonus tip waiting for you. The fifth rule is, look far ahead. Always. Don't forget your time horizon. Buffett cites an incredible statistic. Between 1900 and 2000, every $1,000 invested in the US. It's because investors always look in the rearview mirror. When markets go up, they think they'll go up forever. When they go down, they think it will be that way forever. So they buy high and sell low. But those who can remain calm, clear-headed, and rational, they are the ones who get rich in the long term. And it doesn't take a genius. It takes patience, consistency, and perseverance. You will see things you won't believe in your lifetime in securities markets. The country will do very well over time, but you will see these huge waves. And if you can stay through that, if you can detach yourself temperamentally from the crowd, you will get very rich and you won't have to be a genius. Okay, we've covered the 5 core rules, but as I promised, I have a bonus with which I want to leave you. First, let's quickly recap the 5 precious pieces of advice that every investor should have firmly imprinted in their mind. 1. Don't sell in a panic. 2. Seize opportunities when they arrive. 3. Choose quality companies over cheap ones. 4. Buy only what you understand. Bonus tip. Always think long term. I myself have learned to trust these rules during market crashes. How can we face moments of fear and sharp market declines with the right mindset? The answer is simple. With patience and discipline. Buffett uses the metaphor of a dart game. Imagine you only have 20 darts to throw in your investing lifetime. This would obviously force you to choose only the very best opportunities. Value investing isn't a short-term game. It's a strategy that rewards those who know how to wait for the right moment. Well, that's all for this video. Thank you for making it all the way to the end. If you enjoyed it, please hit that like button. Leave me a comment below if there's any other advice you'd like to share with investors, especially beginners during these challenging market times. Don't forget to subscribe to the Money Made Easy channel if you haven't already. Happy investing, everyone.